we have Sandip Agarwal from Sowilo Investment Managers now joining in. Sandeep, the street doesn't seem very excited. They are showing aggression. They are talking about participating in the AI play in different ways, internal, external, getting closer to the customers, but also with acquisitions now, and lots of acquisitions. They're going to get very aggressive, is their word. And now this AI data center. I mean, how should you think about it? And what could be the benefit to TCS? What could be the flip side, the negatives?
No, hi, good afternoon, and thanks for having me on the show. So the way you should see a data center business is that we need to know what is going inside the data center. So the way, they are talking about the investment, which is like, 5 to 7 billion, basically it is $1 billion for 150 megawatt. It seems that, probably they will not be infusing too much of GPU or may not be infusing any GPU. And that I think is the biggest difference between other people who have announced similar capacity at 4 or 5 times of the capex. Now, if you are not going to put GPU in that, that means that you are not going to do backward integration, which means you will not have your own AI services. So basically, you will be enabling AI services to the hyperscalers probably through your data center and not coming out with any backward integration product or services for for AI. So I think that is the difference between what others are doing, what TCS is doing. In my opinion, as I believe that, this business is better than distributing cash or giving buyback and all that. It is better than that. But obviously, this business is also fast catching up, while on one side, like solar industry, demand is very high. At the same time, supply is also coming at a rapid pace. The advantage with any tech company to do that, you need two things for pure data centers. One is the land and another is the technology. So they have both in-house. So I think they will be at a slight advantage than many of the players who are coming with data center only with their strength of being in real estate. So I think TCS will have some advantage over that, but again, it is a different line of business, and the returns will not be similar to what the services business is making.
So, what kind of return, Sandeep? What kind of IRR should one expect from this business?
Right now, there is huge scarcity, but as I heard the management, they are talking about operationalizing it in 18 to 24 months. I don't know what the environment will be at that time. Currently, the returns are very good, but as I said, like same solar industry, it is becoming commoditized at a very fast pace. So we don't know after 24 months what kind of return you can expect. But definitely, I don't think that, the returns will be commensurate with what they are doing in the IT service side. There will be some dilution. But again, it is much better than distributing cash like that, because when you put up the data center, you will slowly start acquiring companies with apps, and also you will develop some apps. So it will slowly, you can build a business around it in next 5, 7, 10 years, where, it can compensate for your decline in the core IT services. I believe that, this is a line of business which will help them to, cover some losses on the growth part on the core IT services in next 3 to 5 years time.
So on the whole, you're happy with what the company is doing, the ambition and the aspiration.
Yeah, I think it is a good step. This is the best option rather than burning unnecessary huge amount of money in R&D and trying to do something. This is the middle path, I believe, where you will have better returns, and also you are diversifying and your growth will also be taken care of. So nothing will happen overnight, but in after 2 years you will see some benefit of it. Also remember, this will be very small portion of the total size of the revenue of TCS even in next 3 to 5 years time, and hence street may not be excited, because when you do the Excel modeling, you don't get very exciting numbers on it.
Sandeep, we have all of the other IT companies coming out soon. What's your sense in terms of which one could probably surprise on the upside?
No, so if you see the estimates of the street, most of the analysts on the street are estimating very muted growth. If you see on year-over-year basis and even quarter-on-quarter basis, there is growth for 1 or 2. So as I have been maintaining my view that this industry is now X growth primarily because, maximum market share gains which were possible has been already done, and this industry is matured industry. So I don't see this industry to grow at more than 2-3%, and Indian IT companies, despite all their strength, the large ones cannot grow more than, mid-single to high single digit. And for that, I think there's something new has to happen to, get a re-rating of the multiple. So this will become more like utility companies if it is only core IT services. So I believe that, slowly the multiples will start trending between 16 to 20 times, and that will be the fair multiple where probably people would like to buy them for buybacks or for dividend or for different line of business. So it will be a multiple which will be assigned to the high cash flow generation and not to the substantially to the earnings growth.
By the way, sorry, unrelated to IT, but do you have a view on Ixigo, Sandip?
Yeah, again, platform business. I will not comment on particular company because we run a PMS, but we love most of the platform companies. But also remember, in platform companies, there is one challenge that which space it is, that is very important. Number one, number two, also how long it will take to make a material impact on the earnings. That is very important. While in many of the platform companies, they have started becoming profitable. The good part is that the whole ecosystem has become very rational. Now people are believing in turning profitable rather than just burning money. So I think very good times for most of the platforms. We see huge growth opportunity in all the platforms, most of the platforms where management quality is good. And I honestly believe that this is the space, platform is the space which investors should start looking for next 5-10 year perspective, because this is a space where we will be able to sweat. See, what has happened in big tech in US is that they are sweating the capital in the most optimum way through this big tech. So in India, the biggest resource is the manpower. So all these platforms, in a way or other way, they are sweating the human resource, whether it is Urban Company or whether it is Zomato, whether it is Eternal, all are sweating the human resource. So this will be becoming very, very big for us. And we are very, very positive on the whole platform space. But obviously, based on valuation and other things, we buy or we will invest. That is a separate thing. But we love the platform space.
Okay, Sandip, thank you very much for that. Ixigo too started trade lower.